Hello, how to file Form 1120S and Schedule K1 for the 2025 S-Corp tax return. Well, we are going to use an example here. I'm using a tax software here, and we are going to complete the form using some examples together. So, and depending on the software you are using, you might be in a questionnaire mode where it will ask you questions and then you answer the questions and the software will put your numbers in the form where it's supposed to be. But as a task preparer, I like to use the form version. So therefore, I'm going to explain the process using the form version as well, since I don't use the questionnaire. But knowing where your answer is going to go in the form will help you answer the question the software is asking you properly. So when you have an NLC task as an S Corp, you are going to file Form 1120S. And it's going to ask you, when your business um, was incorporated with, first you are going to have your business name, and we just put a name here. You are going to put your business employer identification number, and you just make sure your business name is the legal name that you put on your EIN application form. It's going to ask something on related to when you create your LLC. If it was an LLC that was turned into an S corp later, or if it's an S corp registered from the bat when it was created. And here we can just put a date. For instance, and then it's going to ask you when was it turned into an S corp, and here we can just put a date like that as well. So the next things you are going to complete as well, I don't know in which order those are going to those questions will be asked you, but pretty much you are going to complete this session with your business address, your city, your state, and your zip code. So in this session here, we have session A, where we put the dates that you have the S corp. We have the B, which is the business activity code, and we can click on that, and it's going to show you all the code here. And based on IRS rules, I'm going to go to, let's see if we can find the instructions. And the instructions, you can open it on, we can just go to IRS website and put that, and you'll be able to find it and download it, the form and the instructions. So I'm going to go back here, and we are going to look at the business activity code here, and you can read the first, let me, just in case I'm blocking your view, let's take that out of the way. And so you are going to read it pretty much. Is asking based on your business where you are generating revenue from, which business code will you use to classify the business you have. But it's inserting, you choose an activity that is generating more revenue for the overall business that you have. And for online business owners, retailers, you have an information here as well that to look for, be on the page to look for your business and use that code. even if you do not have brick and mortar, office, you are online, that would be non-store retailer. When you are online business owner, to look in here and choose what kind of business your activity that is generating most of your revenue is. So we are going to look here and use just an example here. And for instance, if you are a tax preparer, you are going to find tax preparation service there 541213, and we are going to look here, like for instance, our business or started with a tax preparation, and we incorporate other business activities that we have as well, like sewing to sell. And sewing to sell, because we sell at the end user, therefore we are not a manufacturer, but we are a retailer. So therefore we are going to look to see in the retail section, which is retail trade, what activity will we choose. And we know that we sew home and living products, and we sew accessories, clothing accessories, we sell digital products. So I'm going to come down here, and I know they will have home, all other home furnishing retailers, they have that number. But again, I'm going to go down, and they have general merchandise retailer. I think I like that better. And they have department stores, they have warehouse, club, shopping center, and other general merchandise retailers. So I'm going to keep an eye on this number 455210 number, and I'm going to come down here to see. So pretty much here is asking us question here so that it can use it to give you the code. So if you are going, so the questionnaire could go that route as well, but we are going to be looking for that here. And we are going to be under retailer, not wholesaler, but under retailer. And let's see what we have here. They have, okay, so they try to have clothing accessories here for us. They have general merchandise. We can pick that to see what it's going to give us. Okay, it's not going to give us any number. It just trying to help us pick one there, and then we can come to the business code and actually find the code. So here is giving us two code. I don't know if you recall those two. We have them. Let's go back here. We have those two here. So it's pretty much that B session is giving us those titles, I will assume so, and then it's narrowing down for us to pick the number we want. So I'm going to pick this one here. So C is asking to check schedule M3 if it's going to be attached. It's not going to be attached, therefore we are not going to check it. But again, if you want to find out what schedule M3 is, if your business is required to file it or not, you can read more about it in the instructions. We can just come here and put schedule M3 to see if you'll find something related to it. Now we are not. So we are going to put M3. We are not finding anything either. But again, let's go back all the way. When you are, you have been asked a question and you don't really know the answer, you can come to the instructions and scroll through to see if you can find some information on it. Because we are using the form, and the instruction has try to explain line by line for the form, you can scroll down to that section and read more about it. And I think now all business owners will be required to attach Schedule M3. So, okay, so Schedule M3 is if your total assets is 10 million or more. So with our small business, we are not going to be required for that. So we are going to leave it blank. So line section D is going to be your EIN. E is going to be when you incorporate the date, your business, when your business was you submitted to your state to create your LLC or your S corp. And if it was an LLC, then it will be when you create that LLC, you are approved for it, and section A will be when you request from IRS to be taxed as an S corp. So, and now F, total assets. For the past few years, it has been a requirement to put your total assets for S corp. So therefore, we are going to click there, and it's going to send us to the balance sheet. And we are going to complete the balance sheet. So it's called Schedule L. And if you are answering question to the software will ask you questions and put it here and then put it where it's supposed to be. So how do you complete the balance sheet? So for your S corp, so we have the beginning of the year here, and as a new business it's going to be 0, but in this example we are not going to behave like it's a new business. We are going to just copy that number. Is going to be your, let's see, it's going to be pretty much cash at the at the beginning of the year 2000, let's say January 1st 2025, how much cash the business account has there. And at the end of the year, January 31st 2025, how much cash was in the business account. So we are going to put it there. So, and if you sold to customers, clients, you provide services, you have not received their money yet, you invoice them, you have not received payment yet, then you will put those on that line at the end of the year. And if you have inventory, it's going to go in this section as well. So we are going to, let's just click on here. So when we click on here, it's going to take us to the inventory page. So the inventory page is going to be form 1125A. So while we are there, we are going to complete that section. So I'm going to, again, to complete those, there are documents you need to have on hand. One is the balance sheet. The second one is going to be cost of goods sold. So, and cost of goods sold at the beginning of the year, let's just copy this number here. We have this inventory value is just going to round it for us. I'll assume so. Okay. And purchases during the year. What I like to do though for the purchases section, when I move products from raw material inventory to make things and then enter it in the finished product inventory, I consider that as purchases as well, in addition to raw material that were purchased and brought in. So I like to have those two. I like to call it turnover, and I like to have it there. So moving it from raw material to finished products will pretty much override each other. But if we purchase things, raw materials, to add it to our raw material, we will have it in this section as well. So under inventory purchases during the year. But this was pulled out of inventory and then put back in. So when it was out of the inventory, would be that's just the way I like to do it. It does not mean that's the best way or the only way, but is we didn't have any purchases during the year, but we have those in and out of inventory manufacturing things. So And then let's go back to the form again. So no purchases, cost of labor, we are not going to allocate any labor specifically to those inventory. When you put some labor here, is going to be inventorized. When you sell those products, that's when the cost of goods sold deducted will include a portion of those costs of labor. So we are not going to allocate our labor to inventory here. Line 4, we are going to leave it alone. Line 5, other costs, I'm not going to put it into there. So line 6 is going to be the total of line 1 all the way to 5. It's going to just do it for us. Line 7, inventory at year end. So we are going to go back to our inventory spreadsheet year end inventory. Let's copy that number and go paste it there. Automatically is going to calculate the cost of goods sold. So we can compare that to what we have here. Yeah, cost of goods sold. So now while it's completing those, pretty much asking you what was your inventory at the beginning of the year, purchases. If you are using that same software from previous year, it will automatically know your inventory at the beginning of the year because it's going to come from last year 2024 and year 2024. So this inventory line 7 is year end 2025, December 31st 2025. Year end inventory is going to be inventory at the beginning of the year 2026. January 1st, 2026, inventory at the beginning of the year is going to be 7840 in this essence. So that's the way it works. So this will be December 31st, 2024 year end inventory, which became 2025 beginning of the year 2025 inventory level. So now we are going to come to line 9. Check all method used to value those closing inventory. We are just going to say cost. And for certain small business taxpayer, alternative method of accounting for inventory. So they pretty much has those things. I'm not going to check those. And was any written down of subnormal goods? I would just say, was there any written down? I just say yes. You can choose to keep it no. There is no subnormal goods, but if there is any, there will be a write down information on it. Was the LIFO inventory method adopted? It's going to be no. LIFO or LIFO is last in, first out. So pretty much when you are producing things, you are making things, you are buying, making things. When you are taking things out of inventory, the first things you purchase, let's say you purchase fabric, in our case where we purchase fabrics to make things to sell, and we are purchasing the same fabric but multiple times during the year, when we are taking it out of the inventory, assuming that we purchase them at different prices, that same color of fabric, the first one that we purchase within that session will be that cost we will use as the cost of that product that we sew, if that makes sense. If we purchase a fabric for $12 a year and we purchase that same fabric again sometime during the year for $13 a year, or we purchase even some in 2024 for instance for $10 a year, we still have it. When we are making things in 2025 for instance, we should not use the fabric, the cost of the fabric we purchased in 2025, but the one we still have from 2024, $10 a year, that is what we will use. That is first in, first out method. So, and I'm going to assume that is what you are using. But if you are using LIFO, last in, first out, you check that, and then there are more to it that you have to go through. So, and since we are now using LIFO or LIFO, I just like to say LIFO, from French, how French will say. So, but I don't know if English say LIFO or not. So I'm just going to skip with LIFO. But anyway, so if property is produced or acquired for resale, if property is produced or acquired for resale, do the rule of cession this apply? So you can look more into it. You just have to search it on their IRS website. But Form 25A, I don't know if I have 25A instructions here. Form 1125A has instructions at the bottom of it as well that could explain what that 263A is about. So the small business taxpayer is now required to capitalize costs under that section. So yeah, and they just have information for you there. But I'm just going to keep it no. So was there any change in determined quantity, quality, cost, and valuation? I'm going to say no. Pretty much it's just asking is there a discrepancy between your year-end inventory like 2024 and beginning of inventory 2025. Technically, year-end beginning of the year should be the same. So type of question here. So I'm just going to keep a no. So when this is done, I'm just going to save it and I'm going to click on back. It's going to take me back here. So automatically on my balance sheet, it put those numbers there for me. So US government obligation, I'm going to leave it blank. I'm going to continue all the way to building depreciable assets here. And again, we have things there. So I'm going to go to our spreadsheet and I'm going to go to our schedule L and I'm going to put what in this example we say we depreciated so far the beginning of the year, and this is what we depreciated so far. And I don't think it needs to be a negative number here. I think it's going to do the subtraction for us on its own. Let's see if we have that 13. Yes. So now here, no, let's undo that. Okay. So let's come back here. So this is the beginning of the year. And now we are going to come to year end. So year end, we'll come back here. So this line is what depreciable asset you purchase for your business throughout the year. And if you purchase some asset in 2025, you are going to add it to your existing assets that you have in the business. And we didn't purchase any, so beginning and year end are going to be the same. So here is going to be how much we depreciated so far. So it's going to be like, you can, let me see here. Let me copy this number and exit it. Okay, so it's going to be how much was depreciated so far, and this is going to be how much is left to depreciate. So I'm going to go back here and I'm going to go to depreciation so that we can take a look at it. We have an example here, 2025, but when we select from 2015 all the way to 2024, we have 2870. So let's go back here, 2870, which is here, what got depreciated so far. And let's go back, let's go back here. So this number here is the total business assets over the years. how much was depreciated so far. The difference between the two will give you how much you have left to depreciate. So when we come back to depreciation, okay, let's see here. So this is 2870. How much was depreciated so far? Now, when we include the amount we are going to depreciate this year, 2025 is going to be 3575. So it's going to be this number. So this number included what got depreciated up to 2024 and what is going to be deducted in 2025, and that will leave us how much is left to depreciate. So, and the software is doing that for us. And once you enter your business asset in the software, your software will be able to calculate your balance sheet for you. So I'm going to we have amortization information as well, and that is going to be 0. So therefore I'm not going to, why not, I can narrate to it as well. So for the intangible asset section is 37.99, and everything was pretty much depreciated, amortized already. So therefore there is nothing there. So I'm just going to put it. So that is how we are completing our balance sheet, and this is our assets that will go in section F of the S Corp. So now that we have the asset section completed, we need to complete the liability section as well. So when we come back down to the liability section, I'm going to put this, and account payable could be people you owe money to. It could be payroll payroll tax that you have not deposited yet, and it could be credit cards debts that you have not paid off yet as well. Since you use credit card to pay for things, whatever you pay for, if it's in the asset section, if you do not put that credit card debts in the liability section, your numbers will be off. So we are going to just put that number there, and the end of the year we are going to copy that and go put it at the end of the year as well. We'll go back, and I like to put business owners capital contribution to the business under let's see, additional pay in, no, capital stock. I like to put it under capital stocks. That's and at the end of the year is the same, like people that own the business, how much they contributed to the business. I like to call it capital contribution. I like to put it under capital stock. And retained earnings is the profit or loss generated over the years from doing the business, from running the business. So here we have a negative 955. I'm going to put negative 955, and at the end of the year, let's leave it like that to see if it's going to complete it for us when we come back to it once we enter things in the form. But so far we know what we came from here. What we came for here is this one. So I'm going to save my numbers, and I'm going to go back to, I can just do back, or I can just come here and I'm going to click on the form that I'm filing, which is this one. So you can see that it brought the balance sheet total assets back to here. That is how you find your total asset. I don't know what question your software is going to ask you, but you'll probably ask questions to complete your balance sheet or Schedule L and use that total asset at the end of the year to complete your section F on your behalf. So now we'll come down here. Is this corporation electing to be an S corp at the beginning of this, at the begin with this tax year 2025? The answer is no. In this example, is the corporation filing a final return? The answer is no. Is the corporation terminating S election? No. A check boxes that are applicable. It's not amended return, it's not change of name, it's not change of address. So we are going to leave those blank. Enter the number of shareholders that were shareholder during the year. In this example, we are going to put 2 people. No, I'm sorry. So automatically is asking, let's see here. Well, it's not going to allow me to put anything here. I thought it's going to at least have that there for me to put about when we are filing schedule K1 for the shareholders. We can come back and double check it to see if it did it for us, because we do not want to override any formula in the software. So aggregate activities and group activity. We are not going to aggregate activity. We are not going to group activities here. So again, you can read more about it. The 2 is more for passive activities, and 1 is more, when you are doing multiple activities in your business, you like to group them. You can check that. I'm going to leave it like that, and it's just going to tell us where this return will go. And is S corp and L.L.C electing to be taxed as an S corp? Is the corporation and L.L.C electing to be taxed as an S corp? Yes, but it's not now that it's electing, and so I'm just going to leave it like that. And is the corporation a special service trade or a business? And yes, it's going to be a yes, and this is going to create some complete some document with us for this SSBI information. Is going to be asking that information here. Is the corporation an L.L.C electing to be taxed as an S corp? That is what that is, but it's not electing to be an S corp at the beginning of the tax year though. Okay, so for now I'm going to leave it like that for now. So now it's asking us, we are getting into the numbers section, your income. So you want to have your income and your expenses ready. So gross receipt. If you have a service business, you'll be able to, add that information in the income section. So, and it will go there under your gross receipt just fine. So when it comes to, you can come there. So we are going to go to our spreadsheet, because our things came from services and physical products. We have numbers here. We are going to come back to it. So sales, let's see here, I can just copy that. Assuming that was our sales during the year 2025, we are going to put it there. So it's asking for return. It was there a return. Again, if you have services, maybe it may not matter unless you refund, but if you are selling physical products and you have return, you will put it there. So it's going to do some subtraction for you and put it, on line C for you. So line 2 is cost of goods sold. If we didn't go through that inventory session before, here will be where we will do it. But since we already have that, it's pulling cost of goods sold from here and putting it back on the form 1120S form for us. So we are just going to continue it. So that is the good things with using tax software rather than using a form to put numbers. You are going to be calculating things yourself, but the software will put that information on different form that information is supposed to go. Once you give it that information, it'll be able to put it on different form, including your state form as well, for you, saving you time. So gross profit is going to subtract the revenue out of the cost of goods sold, and we'll have that. So, and net gain loss, we are going to leave a blank. Other income or loss, we are going to leave a blank. So we combine our physical and services revenue on line 1. So we are not going to put anything on other income. So our total income is 1986. We can compare it to what we have to see if it's okay. So yes, so now we are going to go back again, and we are going to tackle expenses. So you want to have your expenses ready. In this session, we have compensation for officers. So if you have an NLC tax as an S corp, you are the only one working in it. You are the owner of the business. You are an officer. So salary you pay yourself will go under compensation of officers. If you hire people to work in the business, the salary and wages you pay them will go on line 8. That's the way I view it. That's the way I understand it. So line 7, we are going to click on it. So when we click on it, it's going to automatically sending us to another form, 1125E, but it may not submit it because there is a salary threshold that will allow you to attach this form to the document. So it's going to take us here, and we are going to put peoples that are working in the business. In this example, we are going to assume there are 2. Let's go back here and just put K1. So we are just going to here assume AL is one partner, GL is one partner, and we can just assume AL GL is 25%, and AL, let's just say AL is 55%, and let's make it simple. And the reason why I wanted to do it this way, so that we can have the case that, you know, because there is a 50% threshold, questions that will come into play. But let's have it this way. And it's going to ask you for social security number, and here we can just put and here I'm recording. I can, that is fine. Did you brush your teeth?
Did you?
No, I did not. So that's fine. When I come out, brush your teeth.
Okay.
So we have, let's have that information. Oh, it's going to ask how many hours those people work in the business, and use that information somewhere. But let's continue. So the name of the officer, let's put it. Okay, so now we have an arrow there. It's going to start completing some information for us here. So AL, and oh, let's just put A, and let's put L here, and I know the address, why not? And the city, the zip code, let's use, okay, and the title, why not? Oh, it has options for us. Let's put president here. So he's asking for social security number. What did we use again? Okay. Okay. So percentage of time devoted to the business. So it's good. You know, you track how much hours you are working in the business and so forth. So here, why is it asking in percentage? So why not? Let's just say 100%. So stocks wise here, we are going to put 75. Okay, and amount of officer compensation. So let's see if we have some information on it here. We are going to go back to our expenses. Oh, it'll be this one. So it's going to be this. Divided by 2. Okay, so 108.28. Let's use that example here. 108.28. Okay, so let's save that and let's go back. So automatically it complete this for us. We are going to go back down and we are going to put a second person. So we are going to add a copy and we are going to put a second person, J, L, and the street is going to be what? I think we have something like that, right? And we are going to put the zip code. Uh-oh. No? Okay. And the officer here, we are going to put vice president. So the social security, I think we have two. Okay. And time devoted, I don't know, we can put 1%. And here we have 25% of share, and here 108.28. We can save that and we can go back. We have those two people here. No, we are not going to check anything here, and I'm going to save it and I'm just going to go back. Compensation of officers claim on form 1125A. That was the cost of goods sold form. You remember there is a line for cost of labor. We didn't associate any labor to those. So if you did, you will put it here. That way it can subtract it for you, but we didn't. So the total amount, the total wages is going to be put on line 7 instead. So since there is no other wages paid, we are not going to put anything on line A. Okay, so we are going to go down, excuse me, and repair and maintenance. So if there is such things, you will add it here. And I don't think we have any of those. So if you have rent, you'll add information as well in it. Taxes and licenses. So payroll tax that you paid, you will go back, you will pull that and put it there. So we are going to come down here and we have 1787, and that will be the employer portion of payroll tax, or payroll tax, like the employer portion of social security tax, employer portion of Medicaid tax, and the unemployment tax, which employer pays in full for on the first 7,000 paid to each employee. So those are going to be under taxes because we are putting before tax wages here. We are not going to include employee portion of social security and Medicaid tax here because it is already here. It's the whole wages before tax were withheld out of it. It's going to be their income, federal income tax, including the payroll, will be there as well. So therefore, you are now going to put those here, but only the employer, your business portion of social security tax, Medicaid tax, and the unemployment tax will be on the tax line. So 1787, we are going to put it on the 1787, and I believe we have some interest as well. We will go back and we are just going to, and we can, trying to highlight amount that we are using already so that we know that they are out. So 372 is next. Okay, so depreciation. So we have depreciation. We can try to add it in it, but usually the software will try to, by default, will see if you can expense your asset the first year. If you can deduct, you can claim the full cost of the asset in the year you purchase it. So if you want to do something like that, you can. So that means any asset you purchase or place in service in 2025, you'll be able to deduct the cost in full if you meet, the rules. And it's great. It will reduce your profit. But if there is something you are going to do with your tax form later, like borrowing money or things like that, that you need to prove revenue from your business, keep that in mind, because if you are claiming those depreciable assets in full, if you are deducting them in full on you are taking those deduction offered, is that will lower your profits. If you need to prove to a bank to that will lend you money that your business is generating revenue, keep that in mind as well. I like to just depreciate assets, because if you do not depreciate the assets but you claim it in full, when you take that assets off business, the portion that you claim early needs to be added back as income. Under income section, I believe that line for the 797, or it might go on schedule. Okay, I'm not entirely sure, but it goes back in it, and I just don't like those tracking those things. So therefore, I just prefer to depreciate those assets and depreciate them, deduct the cost slowly. But it's a personal choice. But I think by default, the software will just, expensive for you. But when it comes to those assets, because we have it in business for years, let's see if we can create some things here for it. So it's open depreciation and amortization spreadsheet for us, and depreciation and amortization sheet for us, form 45cc2. And we are going to go to now part 1. We are now going to claim section 179. We are going to go to line part 3, macro depreciation and macro deduction for asset play in service before 2025 is where we want to be. So, and is 707, I think, but we are going to click on that and it's going to be asking us information. So I think we are just going to take the time and put those assets in it. It might show you how those form can be completed. So here, let's go try to group them. Let's see if we can. So the first one, so I have 52cc. I'm just going to see asset description here. We can just put asset 1 2020 and date placing in service. We are just going to put January 1st 2020, and the asset type is going to, let's see, I believe, let's see what I have here. I put iron. Let's see if you can find anything there for it. It's not really office furniture. And you have those options here. It's not a office equipment. I'm going to go with other assets. So by doing other assets, it's not going to be able to know much about it. So we might have to do certain work ourselves. So now this property, we are going to come down here, and cost of it, I believe, is 52 cc, 52 cc, and oh, I have Q2 here. So we are going to go back May. We are going to put May there. Date occurred. Oh, date. Okay, so we are just going to put this as well for it. So the date you bought it and the date you start using it, or it was ready for you to use in the business. That's what those two are. And here, current year, other credit, no, we don't have it. Cost of basis is that. So if sold or disposed, enter the date. We are not going to do anything there. So let's choose the method. And I believe we use mid-month quarter for it. So let's go back here, Q2, Marco straight line. Yeah, is using that, but I don't think it is a 7 years, it's a 5 years. So because I put other assets, in fact, let's leave it the way it was. Let's go back to other assets and change it to office equipment. For instance, it didn't change. We can go back to, is it it's not going to change it. There are things that are 5 years and there are things that are 7 years. So I'm going to go back to other assets, and here it is 5 years, and this area is mid-month, mid-quarter for us. So we are going to keep it like that. And I'm not going to explain too much about it, because again, when you are using a software, it should be able to do it. But if you are a tax preparer, it might make sense to know those. I have video on depreciation, but as a business owner, when you are buying things for your business, it's easy at the end of the year to, when there are sales, to stock up, to buy things for your business. So if there are assets that you are going to depreciate, that are going to last more than a year, they are depreciable assets, you might want to think twice buying things during the third quarter of the year, because it follows other rules. So when you are buying assets during the year, at the end of the year, you total them all to know how much they are, but you want the first 2 quarters purchases to be more than the last quarter. And if the last quarter purchases is more than the first 2 quarters, if I recall the rule right, you are going to use mid-quarter to depreciate if you are going to depreciate. Therefore, it's important to know when you purchase and place those assets in service, because you are going to be taking the mid-quarter as the starting point for the depreciation. But when you purchase things more at the beginning of the year or so, you are going to use a half year quarter. So you are going to depreciate a half year the first year and the other half the last year. So it's just going to do it for you. The depreciation you take for the first year, you will divide it into, take half the first year, like you place the asset in service, half of the last half of the year type of things, and depreciate half, and the last year of depreciation is going to depreciate the other half. So things that you are going to depreciate in 5 years will be depreciated in 6 years, because the first year and the 6th year you are going to take half of that first depreciation. So and so forth. And so I prefer that half year depreciation method than the mid quarter one, which is going to be taking the mid quarter for every quarter. Therefore, you need to know the quarters that those things were purchased. So now we are going to do this one as well. We are going to go back, and I think this one is done. So we can come back here and read more on it, but I'm not going to do anything here, and there is no depreciation. Okay, it's going to ask, we didn't take any of those, so we are going to leave it alone. And prior depreciation, so prior depreciation, we need to find that. I'm not entirely sure I'll be able to find that information in here, but is this one right? We are pretty much doing, in fact, for this one, since 1, 2, 3, 4, 5, 6, so chances are is pretty much doing the last depreciation here. And okay, so it seems like I might have to find that information. And let's come down here. Let's try that and go to 2020 and look at it again. So was it 2020? So quarter, in fact it's quarter 2. So yeah, May, that will work, quarter 2. So we are going to select this and we are going to go all the way to the end. Is all the way to 17, and it's for the A65. 48.65, if I got it right. So prior depreciation is going to be for the A65. So current depreciation is going to be 4. Okay, so and we are going to do the same for quarter 2. No, that is for quarter 3. Okay, so that is to 27. And this is 6692. Can just put it there, 6692. And then we will do quarter 4. So quarter 4 let's see if this total to that amount, yes, is 156.53. 156.53. So we have those. Okay, we have 2021, we can do that as well. So here, let's see, we have this loan that is 7 years. They are all half year, so we just, and I group them here. So we are going to just see, and this one is, let's take that, we are going to take this, we are going to take this as well, and that is, let me write it down here, 1629.76. And then we are going to do this one as well, and this one, and that is 2812. I think that one I can remember it. 2812, 2812, and this one is 1629.76. So for 2022, let's see how much got depreciated so far. It is $4.99. I think I can remember that one as well. 4.99. And then we have, okay, so 2023, take a look here. We have this one that is already, no, it's not completely depreciated yet, is 52.47. 52.47. And then we have the rest, and those are, because they are different type of years, to recover them, that's why I'm summing them like that. 224.92, 224.92, and hopefully we have the information we need here. And I'm just going to close this without saving it. So now we are going to go back here, and this one is done. We are going to can just scroll down to see the questions that is asking you. We are going to save it, and I think it's going to ask us to add another asset. Click here to enter business percentage use of vehicle information. It's going to be 100% business use. I'm not seeing it there. Let's see, it's not vehicle, so it's not vehicle, but okay, not sure why we need to come all the way here, but again, this is where you'll put information on vehicle. Business investment use percentage. Okay, I'm not overriding anything here. Can just leave it like that. So let's go back again. We'll come back here. I'm looking for another sheet to enter more assets here, and let's save that. And I should be able to, okay, here, add another and we can just go back. It is bringing us back to our depreciation sheet, but it's not all. So we are going to come back here. We are going to add another copy. And in the past, I will just pull forms from IRS website, Form 4562, depreciation, Form 1120S, and I will just complete those. But then I will let you know that you need to use a tax form to file your return. This year, I like to use a tax form because that's what you are going to use, but you are going to be using it in the questionnaire mode, review mode, but I use the form mode. So that is, and in the form mode, that is how I complete it. But the software should be able to give you both options. So here we are going to put asset 2. Again, 2020. So date, place in service, I think we put July there. And because those are mid-quarter information, it matters to put those. Again, it is, let's see here, a 5-year as well. So I'm just going to use other assets is 100%. Okay, and then I'm going to come back here for the cost, and the cost is 76.48. Sorry, here 76.48. And the beauty is, once you have those assets in the software, you are not going to do it every year again when you are using the same software. And assets you purchase during the year, once you put it in the system, the following year, if you are depreciating it, it's already here. It's going to calculate the new year depreciation deduction that you are going to take. But when you are using the software for the first time, you have to do those work. But question mode will ask you question and will complete the form for you. Current year, I'm not going to take any credit there. And here is going to be Marco as well, and it's going to be, it's a 5-year, so I'm going to use 5, and it's going to be mid-quarter. And I think that's pretty much it for this one as well. Oh, at the bottom I need to put, it's telling me current year depreciation. I need to put prior depreciation that I took, and I believe it's 66.92. So we are going to put 66.92, and it seems like, okay, it's optional, so we don't even need to do that. So, but it's just going to tell us what we need to deduct now this year. So that's good to know, and I think that's pretty much what we need to do for it. And I'm going to save that, and I'm going to go to the bottom, and I'm going to go back, and from here I'm going to click again, and I'm going to add another copy, add form, and here is going to be asset 3 2020, and date we place it in service is going to be 12/1, and I can copy this number here. You can see that's when we purchase it as well. An asset type, tell me now what I have there. I put PC, let's see. So asset type, computers, let's put that, and is 100%. The cost, we have that, and okay, here we are going to choose the straight line as well, and the life. Why is it keep showing 7 years though? Is 5, and it's going to be mid-quarter, and the amount deducted so far we can copy that as well, and we'll go back and we will add it to it, and it's going to be somewhere at the bottom here. It's telling us how much is going to depreciate this year, which is 19. Oh, okay, so actually putting those numbers is affecting the numbers that it's putting. So I don't know, I could pull that spreadsheet and double check it again to see if it's deducting the right amount, but I know how much this year deduction is going to be, so we will see it at the end. We are going to go back again, add, copy, and we are going to do 2021. Okay, 2021, we have two different depreciation here, so we are going to do two entries as well. So we are going to have 2021 assets 1 2 3 4, and at that point it was just half. It's going to be half a year, so therefore I'm just going to use this as an example. We are going to say January, it was placed in service, it was purchased and placed in service. Asset type, what was it? I say lights fixture. So we are going to come back here and we are going to office furniture and fixtures, and 100%, yeah, not listed, and the cost is that, and deducted so far. Oh, so here I like to use straight line, so that's what I use. And here is 7 years, that one is it, yes. By it's just by default we depreciated this amount so far, and we are going to go to the bottom and put it there. Okay, so this is going to be the same that it say is going to deduct this year, and we are going to go back and add another one, 2021 asset 5. Date placed in service, we are just going to do the same thing, and we are going to go to asset type, and I'm not sure, I put printer here, so, and camera. Okay, we can go and see asset type. Is going to be, oh, I don't know why it's on here, but office equipment, computer. We are going to use that, and we are going to come down, oh, here. So how much it costs, we are going to come down here, and it's going to be straight line that I'm going to use. Life now is not 7 years, it's 5.5 year, and so far how much we depreciated is the amount, okay, the amount changed. So I think it makes sense to put how much we depreciated so far if it's affecting current year depreciation. So we are going to save that and go back, and we are going to click on that form, and I think we are going to do 2022. We are going to call it 2022 assets 6. Again, when we place it in service, we can just use beginning of 2022 asset type. Let's see, it's 5 years too. So here I'm just going to go with other assets is 100%, and I believe is 997. And method is going to be straight line. Life is 5, and half year, yes, 499 deducted so far. It's still 2. We are going to save that, and we are going to go back, and we are going to click there, and we are going to add a copy. So now we are going to work on 2023, and we have 2023 assets. I lost track of those assets. Is it 7? And we are just going to say that we purchase it and place it in service at the beginning of the year, and I think it's like 3 years. So I'm going to put other assets here. It's 100% the price, and I'm going to come down here. It's going to be straight line, and here I'm going to put 3 years, and that, and so far we depreciated this amount. Okay, so we are going to save that, and we are going to go back again, a copy, and we will come back to here, and we are going to go back there and do 2023 assets 8, again placing service at the beginning of the year, and asset type, let's see, is office, is computer, and I think that'll be more of these. Yeah, I think the other one I should have used off-shelf computer software for it, but I don't know if it's still going to pull that 3 years for me, because that one was that. So okay, so now I'm going to come back down here. I think I have the price, and we are going to come down here. Okay, automatically, again, it's going to choose the highest deduction for us, which is, if you want to depreciate, you choose to depreciate. Keep in mind that it might even choose the highest depreciation format for you. When you choose the right assets that, like sometimes I'm choosing other assets, you may not know, but when you choose the right asset from the list, it might choose the highest depreciation deduction that you can take out, which is 200. And I'm not going to take that. I just like to do the straight line. So I'm going to do the straight line. It's 5 years. I agree. And so far we deduct this amount. So therefore, because I'm doing straight line, the amount that I depreciated so far is going to be different. So there is a chance this could change, which it is. So it changed. So I'm going to save that, and I think we are done with those assets. So let's go and check. Now it's not correct. It's less than what that should have been. So, but we are going to, yeah, it's less than what it should have been, because when we go back up here, for this year it should be 707.31, but it is less. So something is not calculating right in the things that we entered. But I'm going to, if I have the other spreadsheet open, I will see for the amount it say is going to depreciate, or if those totals that I entered, if I didn't enter a number well, I will have noticed it. But anyway, so since it's going to, let's see here, depreciate less 475 there. I'm going to come back here. 475. You know what? I'm just going to leave it like that. Or I will try to fix it as well by going through it again, but it's just going to take too long. So what I wanted to do here though is just doing more this, the difference between the two, to what I'm expecting and what it's saying. So there is this amount that I need to, if I want, I can put it in. Let's see, I can put it in within the cost as well. I can override it, but I don't want to override anything yet. So let's leave it like that. Let's go back. Open this phone. Out of here is depreciating $4 out of here. So now let's go back here. Okay. So 2020, let's see. I think it's all the way to line 17, if I recall. Okay, that one is accurate. And then we have all the way to line 27. That one is A56. So this one is fine. This one is A56. 956. So it is accurate. And the third one is 3320. So if I come back here, 3320. So those are correct. So let's check 2021. So 2021 is deducting $8 there. We can come back 2021. How many things we did in 2021? 2. So let's go back to it. This 2021 here. So we have, okay, so I have this one. That I pull on the side. Okay. And I think that's the first one. So if I select those two, is 804. Let's see, 804 is accurate as well. So the second one, 199, let's check it out. So if, okay, we select this amount, and this amount is 465. 465 and is deducting 199. So that one might be the problem. So I'm going to come back here and I'm going to check it again. How much we say we depreciated so far. Uh, 1629.76. 1629.76 is accurate here. And we are doing, no, is this 7 years? Is 5 years. That one is 5 years. I think that's where the issue is. Is 5 years. So when we come back here, we are having 698. We will come back here to this spreadsheet and check it again. Okay, I'm seeing 465.65. 465.65. 465.65 is what it should. It should depreciate. So 2000, okay, let's write down 465.65, and we are going to, I think I checked this one right, and we are going to check this number 2328. Yeah, 2328, we have it there as well. So for this one, I think that's where the issue is. For some reason, is depreciating more now than it should. Okay, I'm going to save that change. I'm going to go back to the first one of that 7 years. That one I agree. And 28, we have 8. For this one, oh, asset type. Why asset type is not here? Let's see why asset type is. We use printer here. Is it why it's throwing it off? So let's use a printer again here and go down to 5 years. And it's still having that number there that I disagree with. Why is it changing this to 4 years though? Again, the asset tab is disappearing here. So I'm just going to use other assets. And I'm going to come here and I'm going to change it to 5. Okay, so 465. So now we have 465 that I'm looking for. I'm going to save it, and I think I'm just going to go straight to our depreciation spreadsheet. Okay. $45.62. Okay. Anyway, so I didn't want to do it like that, but I can come down here. Oh, is it going to go through all of it? Come on. Yeah, that's 45.6. Should be able to find it somewhere here. But anyway, we are going through it already. So let's go back. Okay. Let's go back. Okay. So now we have 741. It's still not what I'm looking for. It's close, but still is high. So, you know, that is just a reality of it. So, and I don't think anything is wrong with the software though. But just putting those, again, it's changing those things for me, and it's going to cause a problem when it's changing those. And so that means this is 2023. Let's check 2022 then. Okay, 2022 is fine. So 2022 is fine, is correct. 2023 for the first one. Since why is pulling 7 years though? I think I put 3 years for that one. 3 years. I like to keep it the way I have it. So let's check it again to make sure it didn't change it for me. Okay. Maybe I'm not clicking out of it. So I have 35 here. Let's check it. 2023. Yeah, 35 is accurate. And this one, again, it changed this for me here. It needs to be this. So 150, let's see. 150, 149.94. So 150, it is accurate. Let's save that again. And we are going to do those back again. We can check. Okay. Back again. Oh. Okay. Let me save that. Okay, so now we have 706. That's fine. Rounding issue, we have 706 instead of 705. But it took us quite a bit of time to get our depreciation settled because again it's new to, don't save it. So we have that done and we are going to save our depreciation. But if you place a asset in service in 2025, is going to be in section B, but those assets were placed in service before 2025, so it's going to be on line 17, not line 18, not line 19, but line 17 for prior year. And if you have both prior year and 2026 purchases, 2026 purchases will go on line 19, depreciation related, and 2000 and prior year depreciation will go on line 17. But because we only have prior year's assets, our depreciation deduction is going to go on line 17 and nothing on line 19. But that is, depreciation session. So I'm going to go, yeah, so I'm sure you are going to have those questions and you are going to answer them, but we don't have vehicle information we are going to add here. So I'm just going to leave this alone here for the time being. And you are going to see it's going to carry the depreciation here for us. So it's $1 off, but that's fine. So now, depletion advertisement. If you have an advertisement cost, you put on line 16, and I'm going to leave those benefits session alone. Other deduction. So other deduction, we are going to go on our spreadsheet. So we have other deduction sessions here. Some expenses that you won't see clearly on the form line for it will go under other deduction. And the software will just ask you questions. You will put those using the form area. We can come here and put it. You have postage, you have professional due, you have reimbursed employee expenses. In this session though, if you are working from home for your business and you use, let's say, electricity, internet, and things like that, a portion of it that you want to reimburse yourself as business reimbursement expenses will go on that line. Just do it in a right way there, and but that is the way I will go about it. Employee reimbursement using accountable account and track those as well for added purposes. You don't have your record, but you have startup costs before whatever they say. So supplies, okay, supplies will go on that line. That's great. They have things for it, and I like to come down here and just put my own, but we have lines here that we can use for certain things. For instance, I have biannual biannual report here that, depend on your business type, you might, if your LLC, you might have, I think we've come across postage before, package supplies. We can put those two under supplies too, and we come across those. So, and I have here, I can just total them as, let's see here, from eBay, Etsy, PayPal, 181. I can just total them. I'm recording, so I won't be able to answer your question. Oh, are you taking her out?
Mm-hmm.
Okay, you guys have safe trip there.
I'm gonna stop at the store.
Okay.
I want to see if I'm gonna have to do anything to get them to the.
So here I'm going to put, okay, so do whatever you think you need to do. So here I'm going to put how do I call that? Oh, there is a term that I like to use, platform fee. I don't know, let's just call it platform fee there. For those, we can select them so that we know what we are grouping there. And we will have, I like to use a terminology for this one. I can just total them together. I don't know why I'm forgetting a terminology for those getaway I think getaway payment. Technically, PayPal should be included in it as well. So, okay, so PayPal and Stripe will be under here, and this will be more like those websites that you sell things. I don't know why I'm forgetting, but anyway, it does not really matter. I think I'm just going to put here why I'm calling it platform though. Website fee, and we will have getaway payment fee, let's see, and domain registration. Those things can be grouped as well. I have this is software, and I have, okay, so I think I group everything under domain registration and hosting. Okay, and then we have shipping as well, which can be with mail as well. You just have to see if you want to add separately or if you want to group them. So we are going to come back here, and we have biannual report for 30. We have mail for 1386. So let's go, and biannual report we have 30, and here postage we have that, and we are going to go, we have supplies, and supply use, supply packaging supplies. So okay, so packaging supplies, you know what, I'm just going to put it under supplies here because I didn't create a line for it. And we are going to, okay, then we are going to come down here to those getaway is 179.97, 179.97, and we have those two, that is 7232, 72.32, and we have computer software, and oh, we have PO box fee too. I forgot about that. So let's copy this one, and this one is 78. And we are going to have PO box renewal fee for 78, and we are going to have, let's highlight things that we are using already. So we are going to have 7232, believe we got that one already, and domain registration is next. So domain registration and shipping, which will go with postage as well if we want to, and we want to see if our numbers are accurate. Let's see, the total is 1425. Let's see, for the other, so it's going to be those. So it's going to be from here all the way to here. 1425 is accurate, so those we are going to highlight them as well. So this is correct here. We are going to save it, and we are just going to go back, and it's going to put those other deductions here for us. So now we have, when we go back, we have the income, the refund, the cost of goods sold, we have the gross profit, then we have the wages for the officers, we have taxes, payroll taxes, we have interest on credit cards, also we have depreciation, deduction, and other amounts when it comes to, most of your expenses, business expenses for the S-Corp is going to be on the other deduction section, because we have some, we don't have lines here for those details, so we'll put it under deduction, and it go on that attachment where they have more listed there. And if you don't find what you are looking for, you can add it the way we added, and it's giving us a total deduction of 2,369 against a gross revenue of 1986, generating a loss of 383. Okay, so 383 here, and we can just read through those. We are not going to answer it, we are not going to put anything on those lines, so we are going to no, so okay. And again, if you are a tax preparer, here is where, if the client want this particular return address to address you, to ask you questions related to this particular return, if they have questions, then you check that yes. But, and then your P10 information will show up here. But when you are filing it for yourself, you don't need those information, so that is going to be no, so that this session is now completed. But yeah, so now we are done with form 1120S. So we are going to go to schedule B, and schedule B is going to ask us some questions. What kind of accounting method we are using? Generally, S-Corp use accrual. If you are using accrual, you will check accrual, but this is going to be cash. We are going to assume we are using cash, and here business activity is putting it there, is asking us product or services that we sell, we are just going to put home and living products and digital products. Okay. And we are going to continue. At any time during the tax year was any shareholder of the corporation a disregarded entity, a trust, or an estate, or okay, so at any point during the year that any partner was a company, the answer is no. Okay, so at the end of the tax year, did the corporation own directly 20% or more, or indirectly 50% or more of any foreign or domestic corporation? The answer is no. Own, that same, your company own 20% or indirectly, or 50% or more of profit of a foreign or domestic partnership? The answer is no. If it's yes, you will say yes. So at the end of the tax year, did the corporation have any outstanding share of restricted stocks? The answer is no. At the end of the year, did the corporation have any outstanding stock option? No. Has this corporation filed or is required to file Form 8918? No. Has the corporation issued publicly traded instrument? No. So line A, if the corporation was a C corp before it elected to be an S corp, so they have things there. So you read it. In this instance, is no. So did the corporation have an election under Section 163? I'm just going to say no. Does the corporation satisfy one or more of the following? The corporation own a pass-through entity with current employer carryover. The corporation carry over or prior carryover excess business expenses. The corporation aggregate average annual gross receipts for the past 3 years, 31 million and so forth. So I'm just going to keep a note here. Does the corporation satisfy both of the following conditions? The corporation total receipts for the tax year were less than 250,000. The answer is yes. If yes, the corporation is now required to complete Schedule L, which is the balance sheet that we completed to fund the asset session, and Schedule M1. Okay. So if you still want to attach it, they say to check yes. I'm going to leave it no. We completed, but it's not going to attach it to the form. So during the tax year, did the corporation have any non-shareholder debt? No. That's forgiven. No. During the tax year, was any qualified subchapter? No. Revoke? No. Did the corporation make any payment that will require to file Form 1099? No. But if it's yes, then you need to click yes. If yes, did the corporation, or will the corporation file it on time? Yes. Did the corporation intend to self-certify as a qualified opportunity fund? No. So at any time during the tax year, did the corporation receive a reward on our payment or sell, exchange, otherwise dispose of a digital asset? Here I'm going to say no, but you just need to answer those questions to the best of your knowledge when it comes to your business. So this area I'm going to leave it blank, and I'm going to click on save, and we are going to go to Schedule K. So when you are completing S corp tax return, you have the Form 1120S, you have Schedule B, and you have Schedule K. I think there is some Schedule B1. I've come across it. But that is if Okay, here at any time during the tax year. Why I didn't see it earlier though? It was the first question. At any time during the tax year, was any shareholder of the corporation a disregarded entity, a trust, an estate, or a nominee, or a similar person? If yes, attach Schedule B. Okay, B1. Okay, so the answer is no. I thought it was asking if any partner own more than 50% of it, but it's not. So you will have the form 1120S, that the question that you are answering, if you are doing it through question mode, will complete. You have Schedule B, that will be completed, and then you have Schedule K, that will be completed as well. So we completed form 1120S, Schedule B. Now we are going to complete Schedule K. That is a long video. So Schedule K, and in this video, I forgot to say at the beginning, but we are going to do Schedule K1 as well. And I think what I'm going to do here is, let me see the timestamp here. Okay. That way I will try to put some, I don't know if I will put timestamp, but I might make it useful to see where Schedule K started. So how do you complete Schedule K form 1120S? So Schedule K, automatically the software is going to complete it for you if you put your information on page, should I say page one of form 1120S. So if you are filing form 1120S for your S Corp, and you are engaged in a business activity, your revenue, your income and expense will go on page 1 of that. So Schedule K will pull your original business income or loss from page 1 to line 1 for you, and that will be there. So line 2 will be for net rental real estate income or loss. So if you have rental property, that is by default considered a passive business activity, a passive activity. So therefore, revenue and expense from rental property does not go on form line on page 1 of form 1120S, but it goes on Schedule K through form 8825. So it'll go on form 8825 and will flow to Schedule K for you. So if you don't have active business activity, but you have rental properties, chances that you are not going to put anything on. Let's go back here. We are going to complete form 1120S, but under income section here, you are not going to be putting your income and deduction, but you will be completing your Schedule B and Schedule K. You will be going on line 2 to form 8825, and on form 8825 you will be able to put your property information, the revenue, the expense, and so forth, and that will flow to your Schedule K line 2 for you. But in this instance, where we are making things and selling things or providing services, those are considered active business activities, and they will go on line 1. If in doubt, you can read more instructions on what is considered active business activities and what is considered passive activities. But usually, real estate businesses, a lot of times those are more LLCs that file 1065, but if you create an S corp for your rental properties, just know that chances are it might go on line 2 unless you are providing some active services to where that will go on Form 1120S page 1. But again, check your Form 8825 to see what needs to go on it, and see what needs to go on it and what needs to go on Form 1120S. But when you are going through the questionnaire mode, asking your question and giving an answer, the software should be able to know based on your answer where those information will go. But if you know where that information will go, it can help you answer those questions properly as well. Otherwise, you could answer the question in a way that you shouldn't have if you know what the software is going to do with your answer. So line 3, I'm going to leave it alone. And line 4 is interest income. We are going to leave it alone. We are not, when your information is qualified for page 1 of Form 1120S, things that you're not going to have much left to put on Schedule K itself, other than just the profit or loss from Form 1120S that will go on line 1. You won't have much more to put in it. But if you have interest, dividend, and all those, they will go on it. But when you have a S corp, chances are you should not have interest income that is more than active business revenue or profit. I think it was a long time ago, things that I read about S corps to keep your S corp title. So, but if you have S corp money in a saving account that is generating dividend, it chances that it's going to go somewhere here. But just keep that in mind, read about it, so that you know what S corp shouldn't be doing. So I had to. It was a long time ago that I wrote about those things, and yeah. So, and if there is royalty income, it will go on royalty area here as well. So, but in this, we are not going to have any of those. And you have deduction. Just know that anything that is going straight on Schedule K, now flowing from Form 1120S or Form 8825, if it's coming straight here, usually it's going to be you put the income and then you put the expense. There is some rental here as well that has the income, or loss, and you have, but in general, like if you put royalty here, it's going to be royalty income. So that means you are going to put the expense under another section for it as well. But if all you generate is royalty income, so expense attached to it will go under the deduction section, probably under other deduction. Let's see here and see what is bringing here for you. If we have anything here for royalty expenses, I'm not seeing any by default. Portfolio income, deduction related to portfolio income, and I think here, okay. So royalty income, so it will be here. Talking about it here though, yeah. If you are your business, whatever it does, it generates royalty. So royalty income, we saw it before. So under other deduction, you will see royalty deduction to that royalty income. It will go on here. And if you receive Schedule K1, then you'll put it under that section and it'll open Schedule K1 so you can put those in it. So it has something here as well, but anyway, related to Form ADA 25, which is rental things. So, but other deductions, you'll be able to find a spot to put expenses related to your royalty. I think this one was the last one that I clicked on, but your royalty income will go on line 6 for Schedule K, and your expenses due to royalty income will go under deduction line 12, section E, sub line 12E, where you have, it will type a royalty here for you, and what you put on that form will come and show up here for you. But here we don't have anything, so check this box. If I'm going to check it automatically, I'm just going to leave it alone, but we are just going to read through it, and I don't think there is much here we are going to do. And check here if S Corp has more than one activity for at-risk purposes. So I'm going to check that just to say that we have multiple active businesses, like providing services and sewing and certain type of things. So now line 18 is showing is 383 negative. So Schedule K is completed. So we complete a portion of Schedule L. We have Schedule M2 that is going to be completed. So we are going to work on Schedule M2 as well. So let's save our numbers here. And we are going to go to Schedule M2. So we have Schedule L. We know that we didn't finish it here. Okay, it's not doing it, so we are going to add that there. So we are going to come back here, and we are going to go to our Schedule L, and we are going to add the loss. And here is 393, so it's going to be 390. We can just round it. So I'm just going to copy that 1339. I'm just going to add it here. But pretty much what it's doing is taking beginning of retained earning that was at the beginning of the year, and our profit or loss from this year, adding it together, and it's giving us that. In this instance, technically it should be 1338 since we are $1 short, but I'm just going to keep it like that. So let's see, it's not matching and it needs to match. So let's go here, plus 383. Okay, so let's just do this. It's getting worse, right? And let's see here. Okay, I'm just going to do it this way, and here I'm going to round it. Your liability and your asset need to match, and your retained earning is just tracking your profit and loss over the years for you, and your capital stocks is tracking how much of your own money you are contributing to the business or your partners are contributing. But we are here to work on Schedule M2, and technically Schedule M1, I'm not seeing anything there. I'm going to leave it like that. We are not required to file it, but I'm going to come to Schedule M2, and I think Schedule M2 we are supposed to file it, even for for like all 1120S filers will file Schedule M2. It was not a thing some years ago, but for the past few years, it became a part of the attachment. And this is pretty much tracking our accumulated earning. That's the way I understand it. So here we are going to see what was there at the beginning of the year. If your business is brand new, 2025 is going to be 0. In this instance, we are going to put a number there. So that negative, let's go back here. This retained earning here, I'm going to put it there. And we can see that on page 1, we don't have profits, but we have a loss instead. So he put that loss there for us, and combine them all is this. Let's see, that's what we have on the balance sheet. So we round it. You know what? Let's round it those things so that it is they are matching for us. So I can do that, and then I can go here and okay, can do it that way. So is what I don't know for sure though is if this analysis of accumulated adjustment account shareholder undistributed. So anyway, accumulated account, if is taking into consideration the capital stocks and the retained earning, or just the retained earning. I don't know for sure, but here I'm assuming it's just tracking the retained earning, because the retained let's say the additional pay in capital but yeah, retained earning, because the earning is what distribution will come from. So the way I'm viewing it is tracking the profit and loss over the years that there, and if there is any distribution, it will go on line 7. And since there is no distribution this year, it's going to be 0, and it's going to take the balance at the end of the year minus line 6, and that will be that. So the following year, this amount will be the balance at the beginning of the year. In the past, I will try to put some number here, but after consulting, brainstorming with AI, it comes clear to me that those areas is good. Again, it's just my personal opinion though, that those areas, if you have an S corp, it's good to leave it alone if your business was not a C corp before it became an S corp. So that's what I understood from my research on it. If your business is a C corp before it became an S corp, you will need to complete some session here. But those sessions are not relevant to you if your business was an L.L.C tax as an S corp or started as an S corp. The only session that will be relevant to us S corp filers will be session colon A, where we'll track those. But whether we need to track the whole equity or just the retained earning, that's what I'm not entirely sure of. But the way I understood it is the retained earning, or at least that's what I'm tracking using Schedule M2. But you need to do your own due diligence, or if the software can help you complete it for you, that would be great. But yeah, that is Schedule M2. So pretty much at this point, you are done completing Form 1120S, Schedule B, Form and Schedule K, and Schedule L and Schedule M2. So now we are going to complete Schedule K1. So how do you complete Schedule K1? For Form 1120S. So when you are filing Form 1120S, don't think Schedule K1 is something you are going to fill out separately and give to shareholders. It's something that goes with the Form 1120S. You are going to attach it to the Form 1120S and you are going to give a copy to the partner. So therefore, in my opinion, you cannot complete Schedule K1 and give it to the partners without filing your Form 1120S. Technically, you can, but because it's an attachment to Form 1120S, it makes sense to complete your Form 1120S and information will flow from Schedule K to Schedule K1 because Schedule K1 is just dividing what is on Schedule K between the partners based on what you specify every partner ownership portion is to the business so that those divisions can be done. So when we go to our Schedule K, we only have a number on line 1. Schedule K1 is a duplicate of Schedule K, but for each partners, when Schedule K is for the whole business 100%, but each partner is going to have a portion of Schedule K. So those lines are going to be the same, but it's going to be timing the numbers by the ownership portion for that particular owner or partner. So we are going to go to Schedule K1 and we are going to add I thought it would create those for us already since we add people, but anyway, so Schedule K1 with no name just yet. So let's take a look at Schedule K1 Form 1120S. So is this corporation filing a final? No, because we say not at the beginning, so it's going to check those for us. But again, if maybe if the partner, a particular partner is not going to continue, maybe it might be a case for a particular partner. I'm not entirely sure because it's asking if the corporation is filing a final Schedule K1. Okay, so we have part 1 here that is going to pull information from Form 1120S and put it there for the business, and a corporation total share number. For the past few years, it has been a requirement for S-Corp to put their number of shares. And S-Corps, we don't have stocks, but still we need to put something. So what I like to do is put in like 100% the business. I just put 100 shares. So they say not to override anything here. So that means it should come from somewhere. So I'm going to leave it like that for now then. So I'm going to continue. So part E, information of this shareholder. So line E, shareholders, social security. And again, why is it not bringing those people that I put in earlier out for me? So I'm going to enter, one was this, okay, and if the shareholder is a person, yeah, so enter the person's name and the last name. Okay, we put them as officers, so we didn't say they are. I thought we put ownership. We put ownership, stocks ownership, so automatically they should be here. But anyway, so address, if I can recall what I put. That'd be great. And zip code. Okay. And no, we are going to, if is now a, we are going to leave F2 alone because we enter the shareholder's name is an individual. If a shareholder is not a person, add this. What is there? So enter the shareholder entity name here. If the shareholder is a person, enter that. Okay, so if the shareholder is a disregarded entity, is now a disregarded entity. So okay, so we are going to leave F2 alone because there are people running the business, now companies owning the shares. So F3, what type of entity is this shareholder? Is an individual. So we are going to leave it like that. That's what that is. G, allocation percentage for this person is going to be, again, is set not to override it. Okay, so those information should came from shareholder information, but I'm not finding it. So begin of shareholder number of shares at the beginning of the year is going to be 75. If shareholders ownership change during the year, click the folder. Okay, it didn't change. So year end of tax year, we have that loan. There is no loan. And we have shareholder share of stocks. I'm not reading it well. Okay, so here is now a passive. I'm just going to leave it like that. So because we do not have any ownership percentage yet, it's putting all the Schedule K amount here instead of timing it by the amount, by the ownership amount. I'm going to save that, but we need to put the shareholders information in a form. But and let's see if we are going to find, and I'm kind of surprised. Let's go back a little bit. Okay, I will go back to here. I thought it's going to give us the information on where to put those. I'm very surprised it's not giving me the option to see the shareholders. So we are going to go back to Schedule E, compensation officers form. And I don't know, because I didn't complete the preferred, if that's why it's now showing up here. Let's go to, okay, that's what I was looking for. Let's open that to see what we didn't do here. For this information not to flow. So I'm going to put 75 there as well. And I'm going to go back to this one. I'm going to put 25. And then let's save that change, and we are going to go back to, let's see here, we are coming back here, but I'm not seeing any change at all. Okay, so we are seeing something flow here, but not all of it just yet. So we are going to go back to AL, that one flow. AJ didn't. Is here, but it didn't flow. Okay, so I'm not entirely sure why those things are not flowing, but again, it's going to be more the software that I'm using more than anything, and you'll be using a different software. But I'm having a hiccup here. Let's go back again. And let's go back again. And oh, now here, oh, percent of time devoted to the business. Is it why it's doing that? It shouldn't be. Currently allocated person issue. So let's go back again. Oh, 75. And let's go to here and put 25. Let's save that. Go back and go back and go back. It's not changing. So, but that is not what I'm expecting from here. So let me explain how this should be. So technically this should be 100 there, 100 and 100. I still don't know what the issue is. And for the shareholder, information, you'll add this shareholders information in on F1, Social Security on Part E, Part, yeah, and then individual for F3. For line J, it should be in decimal is going to be 75, and number of share, I thought here should be percentage. Yeah, they say current year allocation percentage, so it should be 75%, and this should be 75 for the number of shares. And then this automatically will do the calculation by taking negative 383 times 0.75. So what's that? 383 times 0.75. So negative 287 is going to be here, and the other person that is 25% will get that. Let's just minus 383. We'll get that 95, 97, 96. So 96, and which one the other one was? 280, 270. 96 and 383. Oh, come on. 383 times 0.75, 287. So who owns 75% of the company will have negative 287, and who owns 25% of the company will have 96, negative 96 on line 1 of their Schedule K. But right now, I'm not sure what the issue is, but the Schedule K is now flowing here for me well, and technically I shouldn't be putting anything here myself. It should come from another form that I should have completed for it when it comes to this software. And yeah, and I thought we completed that when we complete that form for the officers, since we put there that they own a portion of the business. So I'm just going to continue, add another one, and I'm going to here I'm going to add the second person, and I'm going to add J L for last name, the address, and let's put the zip code. Okay, and F2, we're not going to put anything there. F3 is individual, yes. And here you'll ask me not to put anything here, and here is going to be 25. Oh, okay. And here is going to be 25. Okay, so I think the problem is solved. You put the number of shares, it's going to tell you the percentage. They say percentage. I'm not sure why the software is putting it in decimal, but at this point, I think it's going to, let's just continue here. It's going to do the, okay, so it's going to make it 100%. So it's okay. So it's just waiting for me to complete the number of Schedule K1s to enter the number of Schedule K1 that I wanted for this business, which are 2. And with this software, I will need it to put the number of shares. And again, it's based on that 100 shares that I'm assuming as an S-Corp without a stocks 100%, 100 shares, and somebody owning 75% of the business, that means 75 shares, and somebody owning 25% of the company, that means 25 shares. And putting those shares there, automatically the software is going to put the ownership percentage. It's not so much related to these preferred stocks, because I would think S Corp don't have different type of stocks. So therefore, I was not, I didn't really want to put anything there. Let's see. So this one, I'm going to take this one out of there as well because it was not needed. And I can just go back to, and this time devoted, I'm going to go that route as well for this one. And for the other one, I'm just going to put 1%, that it didn't spend a lot of time in the business. That's pretty much what I meant by that. If you are tracking time that you work on the business and so forth. So when we come back here again, we can see that our information didn't change on our Schedule K1. It's just the way it is. So the issue I was having before is it was just waiting for me to create all my Schedule K1s that I want, and then put the number of shares that every person own in it, and it'll be able to calculate the allocation, the ownership percentage based on that, and put the number of shares that this company has in it as well. So the software, so just keep that in mind when the software is asking you a question, that it's going to be like that. But I'm using the form, so I had to pretty much figure out what I need to put in for the software to do its job. So this one that is 20%, I'm going to say that person is passive. The business is an active business, but this person is passive. That person is not. So, and you can see now that we have this ownership percentage here. He allocate a portion of the loss to this person, which is 96 that we calculated before, and since that is going to allocate this to the other Schedule K1. And keep in mind you have 96 here. We are going to go to this K1. We are going to see the whole company, 100 share with 75 share given to one partner. That means this person owns 75% of the company, therefore is allocated $287 loss for this year. And when you total 287 and 96, it's going to give you the loss that we have on Schedule K, line 1. So that is how you complete Schedule K1 for your partners. So we are going to take this one, and I'm just going to keep it like that, non-applicable, and we are going to go down. You'll notice that it divided Schedule K1 line 1 between the partners. And since we didn't have anything on other lines, it didn't do anything. We checked that line on Schedule K, it checked it here for us. And if you have royalty income, you are going to find that split between the partners and put here on line 6. But since that's all we have, that is how we are going to complete Schedule K1 for this partner 1 and for this partner 2 as well. That own 25% is allocated 96 and is a passive, didn't work a lot in the business. So that means he cannot claim passive, he cannot claim this loss against his W2 on his 1040. So those information will be, but that is the idea behind it. But I think when it's the form that will be sent to IRS may not have those breakdown, I would think, but I'm not entirely sure. I think it does not show. This task for software won't show that because it's not a part of the original IRS form. I'm not entirely sure, but it's asking you those questions to be able to probably calculate other things for you. So once you complete those things, it will be able to do the SBR. Let's see if I will find it here. SB, if that form is still a form this year, it will complete it for you. Like, yeah, this form here. So SSTB, because services are provided, and it's just going to complete it. So pretty much is a type of deduction. When you press Schedule K1 for the partners, this form will come with it as well, and the partner should be able to claim some QBI deduction on their 1040. And the way, don't ask me how it calculated, I don't fully understand it, but I think there is a 50% of W2 wages and 25% of asset depreciated and business and wages. So the highest between the two or something like that. I'm not entirely sure, but there is some calculation going on between W2s and depreciable asset to find a portion that can be, you know, allocated to this QBI. So we are seeing the W2 portion came, and there will be some property, it will be associated with depreciable assets, and then we have this loss here as well. And when you are filing your 1040, this QBR, you'll be able to put that information in it to see if there is a deduction that will come out of it. So that is for AL, and we are going to go to JL. JL has that information here as well. But yeah, that is when it comes to QBI. And that is how you complete Schedule K1 for your Form 1090, Form 1120S. But again, it's something that is going to be sent to IRS along with Form 1120S, and you are going to give copies to your partner. So what I like to do is, when this is sent to IRS, you print copies out. You print copies out of your K1s. It will come out with this QBI, with it in the same order, and you just make a copy, extra copy of Schedule K1 and QBI to give to the partner when you have a copy of the whole tax document for your business record. You give a copy of Schedule K1 to each partner with any attachment that will come with it. But that is how you complete Schedule K1. And keep in mind, it can come with QBI. Yeah, Schedule K1 QBI. And we should be able to have Schedule K QBI. Well, yeah, we are in the Schedule K1s. Yeah, Schedule K QBI is here. So, which is doing the whole loss, the whole salary, remember? The whole wages, and that is where it gets confusing for me. But the qualified property, so property is the property that the judge is qualified to be UBIA to be here. So, and from here is going to go, and that is the statement A. We have SSC for specialized service, and that is going to go, it was distributed with Schedule K1 as well. So, and that is how you complete Form 1120S for your business. And then you have Schedule K1s that you'll complete as well. They are all one, is a part of the process, and you'll give that Schedule K1 to the partners. You don't do that one separately and later file Form 1120S, but filing Form 1120S, which flow to Schedule K, will be allocated to the partners based on their ownership percentage. And then you give them a copy, and you'll have the whole document that you file with IRS, and you'll have a copy for your business record. Thank you so much for your time. We thank you very much for all your comments, and we thank you for subscribing to our channel. I'm Afiavi Liberman, Girls of Lebanon Consulting, L.L.C, YouTube channel, and NinaSoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence where you do not depend on an employer to provide for your family. And filing your own business return is one way to keep your business expenses low, and allows you to know what information you need to file your business return and track your business financial data accordingly as well, so that you have the information available when you are ready to file the return, or when you are ready to give it to a tax preparer or professional to file it for you. You'll give them the information that they will need to file the return accurately for you. And Form 1120S is due by March 15. I don't like to work with the gray area. If it's a weekend and things like that, that's not matter to me. March 15, I just like to keep that in my mind like that. And Schedule K1 is supposed to be given to the partners by March 15 as well. So please, because they are going to use it to file the 1040, which is due by April 15. So thank you so much for your time.